on the price action of Bitcoin from different points of view. So today we have with us Thomas as head of institutional of Xapo Bank, Julio, head of research at CryptoQuant, and Zach, head of research of Grayscale. So guys, in order to make it interactive, I'm gonna get started. Just to put the topic out there. As soon as you address the topic, feel free to first give an insight on yourself, what you're doing, and then feel free to go ahead immediately into the topic. And so, just to get started, we all know Bitcoin has underperformed meaningfully this cycle. What's driving the disconnect in your point of view? And so maybe we can get started with Zach, with Grayscale.
Happy to jump in. Thanks for having me on. Delighted to talk about this topic with an awesome group here. I run research at Grayscale. In my prior life, I was a macroeconomist on Wall Street, so definitely thought a lot about quantitative easing and liquidity and what it means for asset prices. I think this is a great group to huddle on these topics. Look, I want to say two things. When we talk about underperforming the cycle, I think that comment, I think that is one framing for how crypto investors, Bitcoin investors think about this topic. Maybe I'll make 2 points to kind of prime the discussion. One is about the kind of cycle more broadly, and then maybe about the drawdown in the last few months, just my kind of key observation. So on the cycle more broadly, look, I think that we can say that the Bitcoin investing landscape has entirely changed. I mean, the nature of the buyers, the nature of the products, the nature of the institutions that are involved are completely different than they were, over the past cycles. And a huge piece of that is at the heart of Grayscale's business, which is the U.S. ETFs and the access that creates for a much wider range of investors. So I think you're seeing a new type of capital come into the crypto ecosystem that is, we use the term institutional. Really, it's a wide range of professional investor types, institutions, literally speaking, but also financial advisors, high net worth individuals, people that can incorporate the ETFs into their portfolios. And this is one part of the evolution that's going to continue on. So, the buyers, the market structure has changed. And so the fact that the price behavior has also changed, I think, is not that surprising at some level. So have we kind of underperformed the cycle? I mean, of course, we should talk about that on this call. But I think it's been a kind of great period for Bitcoin in the sense of bringing the asset to many more types of investors. And they behave differently than retail investors or early Bitcoin investors. And so the price change, to me, it goes hand in hand with the kind of structural change that we're seeing in the asset classes overhaul, and it's not something we should be terribly concerned about per se. And then on the drawdown more recently, just to kind of make that point to prime the discussion, I think the key observation I would make in terms of recent underperformance is just to stress that this is not just about Bitcoin. It's about software stocks, it's about quantum computing stocks, important to say, all of those frontier technology market segments have moved down in lockstep. So I see a de-risking in growth portfolios in general, rather than something wrong with Bitcoin. And I think to some extent there's been babies thrown out with the bathwater in this AI disruption trade in markets. And I think that we're going to go through another phase coming up here where investors are more distinguishing between things that are disrupted by AI and things that are complemented by AI. And I think crypto, in my view, will come out on the right side of that. So lots to talk about those, but those are some of the prime the pump discussions that I would share with the group to get us started.
Thank you very much for that, Zach. Actually, you touch upon a lot of different things there. Very interesting. Maybe just to kind of like add on that before we continue. So, within the research that we just published, one of the things that we're trying to understand is this a de-risking due to basically tech stocks and Bitcoin being treated as a risk asset, and the overall trend that we see there. And what we wanted to do was to kind of like compare how does Bitcoin behave to the expansion of the global money supply. And so we came up with a metric, which is a KUROC, global liquidity index, where we are measuring the global liquidity by looking at the balance sheet of the Fed, the ECB, the Bank of Japan, and the Bank of China, as well as the largest private banking institutions, to look at the expansion and the contraction of the money supply. What we found out, and I'd like to have your opinion on this, was that all the way up to basically COVID. The correlation between expansion of money supply and contraction was basically directly impacting Bitcoin. As the money supply would expand, Bitcoin would go up, and as it would contract, it would go down. Now, there's been a lot of talk about the fact that kind of like broke, and that if you look at the expansionary move, we now don't see that correlation anymore, and so then there is a whole speculation around, is Bitcoin now more correlated to growth stocks, for example, to Nasdaq. What is interesting is that what we found was that when you actually go and look under the hood, even though the correlation to the overall global liquidity broke, there is still a very, very high correlation to the quantitative easing on treasuries, basically the issuance of bills, so T-bills in the US at the moment, where we found the highest correlation with a lag. And so one of the big hypotheses that we have in this case is that the other alternative to growth stocks is in fact the correlation to the contraction to the treasury issuance, which we have seen over the last year, and that as soon as that would expand, it might actually resume an upward movement in terms of Bitcoin. What do you guys think about that? Thomas, you want to address it from point of view of Xapo as a banking institution?
Yes, yeah. Well, look, quick introduction. Thank you for the invite to the call. So I run our global relationship management teams and client coverage teams. Think of Xapo. A lot of people will know Xapo have been in Bitcoin a long time. We were established back in 2013. And so we have, I guess, the most established, longest standing Bitcoin platform, which has evolved really into a Bitcoin wealth platform. I mean, I think it's fair to say when we first started, it was an access, a trading, and a custody platform. And now, given how commoditized those businesses have become specifically for Bitcoin, and the wealth that's on our platform, we've morphed to now high net worth and ultra high net worth wealth in Bitcoin that need to preserve that Bitcoin, that need to generate yield on that Bitcoin. And then some of that is now morphing into passing Bitcoin on to the next generation, right? And so that's setting up structures, having offices, and hence we've opened up our institutional business. And so very aligned in that.
An account.
Yes, yeah. So very aligned with that ultra high net worth family office. And so the relevance for this call is, we feel very well placed, having been Bitcoin only and, a Bitcoin pioneer in many ways from a banking lens since 2013, to at least opine on what we've seen from our platform. And so I think a couple of points of notes. I like Zach's idea of, if you looking at the drawdown, particularly from the all-time high, I think it's a good starting point and try to explain that drawdown. And breaking it down to, it's unfair to just look at the drawdown without looking at the money in the capital that came in post ETF approval, right back in January 24. And so I think you need to look at those in continuum, because when you look at those in parallel, it helps you explain the exodus of capital and be less. No one likes, especially as a Bitcoin only provider, we don't like our main asset being down 50% within 6 months, right, from an all-time high. But when you can justifiably see rationales and breaking down the cohorts that have left Bitcoin and the signals and the catalysts that have led to people selling Bitcoin, it's more understandable. And I think what we've done is try and break down into just different cohorts. And so if we look at, the all-time high, and Zach touched on it, the ETFs, specifically the US ETFs, were such a big catalyst for institutional adoption. Zach, you'll have better stats than me. I know if you think broadly of ETFs, you probably think 60, 70% institution, balance retail. I think for Bitcoin ETFs, the data seems to be quite inverse, and sort of 70, 80% retail and 20% institutions. But if you look at the filings, in the US, most of those look to be in the hedge funds, well-established names, asset managers, specifically the hedge funds that you could call and at least bucket into the arbiter or the CTA manager, right? And so, those from an institutional background would look at a lot of those names and understand those hedge funds names and know that you can't be a portfolio manager in any one of those and holds at that point a 40 vol asset and just be outright long the ETF. And so most of you would look at that and go, oh, actually they're hedged, whether it's versus the basis and versus CME future or versus some other alternative. There's probably an ARB there, or it's part of a CTA program where it's more of a momentum trend driven strategy. And so, you look at that cohort and you go, well, if funded basis has contracted from mid-teens, sort of tail end of summer to 4% in January, isn't it rational to expect anyone putting on investing into Bitcoin to get, to arbitrage that basis to exit? And it is, right? And so that kind of, exit of capital is rational. It means also it's closely linked to basis. And so if basis does blow up again consistently and widens, we can expect that capital to return. I think if you look at, the ETF retail investor, and again, Zach, keen for your thoughts here, you'd be very well positioned. I've always viewed ETF, and I think the street views the ETFs holders from a retail side as very, momentum, short-term trading driven investment, right? And so it can be sticky, but it's, the strategy is more, short-term investment. So therefore, October 10 was so pivotal, because if you don't understand Bitcoin and you don't necessarily understand the pipes and plumbing of perps vis-a-vis your other portfolio, and so if Bitcoin is just sitting in one asset, in a portfolio, along with 9 other assets that are traditional assets and trade, in a manner that you're more aware of, you see October 10, like, oh my God, how's there 19 billion of liquidations in a day? So you're going to have this little fear, and we saw it in the fear ratios and metrics. And so is it understandable to see someone who's come into the ETF not necessarily understanding and being a long-term, Bitcoin maxi, and understanding that, Bitcoin, or having the belief Bitcoin is the future of money, but more viewing it as a tradable asset? They think it's, we'd classify that obviously as more of a momentum-driven investor, but just rationally, someone who's looking for more short-term trade investment. Is it rational to see the exit? Yeah, well, sure. Like October 10 would scare the hell out of anyone who didn't understand Bitcoin and didn't understand perps, right? And so I think, again, you look at that and you kind of explain. From our side, I think where we probably feel well positioned is, we did see some sellers from the long-term holders, right? And so if we look at our platform, where we have, holders in close to 100 countries now still, billions of dollars worth of Bitcoin on our platform, we did see some long-term sellers in November, December. Just touch wood, I know February, tomorrow's the last day, this week will be the last day of Feb. February is actually turning to be our first month where we're going to see net buys higher than net sales for just a year, since February last year. And so, we'll touch on catalysts and outlook forward, but I think that's a very positive, just internal signal from our data to show that those long-term, and now don't forget, our platform is long-term holders, a lot of Bitcoin believers, early adopters, and have a lot of Bitcoin wealth, who have ridden multiple cycles previously. But I think that's a data point that we're very much looking forward looking at. But I think that's how we've kind of tried to assess, Juan, the sell-off. And then to Zach's point, I think you need to correlate to that money that came in, trying to explain why it's coming out, and being less panicky on it is what it is. It's an investable asset. When you're the 5th biggest asset at $2.6 trillion, you're going to trade like an asset like the other big top 10 assets, right? And you're going to trade to Zach's point on macro, right? And as proxy to a lot of things. And money supply, Juan, is going to be a key factor there. And so I do like the report. I think that is you're now at that macro level. And we can maybe, if we've got time, touch on Bitcoin as a strategic reserve, because I think that's a longer term trend that we see with a cohort in our family office and institutional clients. I hope that gives you a quick summary of how we've looked at it. And we're not panicking. We've hired people. We've hired 6 senior people since January, right? So it's a downturn. We see there's an opportunity to get talent, and we're in Bitcoin for the long run. And no one likes seeing this short-term price action, but we feel it's very much understandable, and we're preparing for a rebound as and when that happens.
Absolutely. I'm gonna try to get a few I would say conclusion points from what you said, because there were a lot of good nuggets of value there. I found very interesting you saying actually ETF flow is more of a speculative capital than long-term capital. I find that very interesting. I think a lot of people would assume the opposite. So if under that idea, we can maybe use that indicator of ETF flow actually as a multiplier of momentum instead of long-term capital. Very interesting.
I think one with the context of BTC ETF flow, right? And so I think if you look at ETF flow in general, most people are just holding index,
of course,
right? So it's a cheap way to get the index, but Bitcoin and crypto ETF flow is seeing this momentum. I think that's
You do confirm though that long-term sellers were also selling on top of that.
Correct? We saw that in our data in November, December, absolutely.
And capital outflows were rational due to the basis available in the market. Very interesting. Just one for you to just get your thought on this one, last one. Within that idea of the ETF, one thing that we looked in within Key Rock that was very, very interesting was how in a matter of, I would say, a little bit more than a year, IBIT options on CME became the largest, speculative market. The options market became enormous. I think 2 years ago, all the digital asset natives would have never thought of that.
Yeah.
Maybe wouldn't have taken over. What's your take on that?
Well, look, I think I look back and, kind of, again, linked to Zach's point, I look back at that and go, is the glass half empty or half full? Wouldn't we rather be in a position where the SEC approved the ETFs? We've had the most successful ETF launch of all time without being a perma Bitcoin bull here. I'm just trying to be objective and see so much money coming into Bitcoin in such a short space of time, and be it from different sources. And we're always going to try and classify those sources, whether that's as most asset managers and investment analysts will try and do. And I think that's a positive to Bitcoin and crypto more broadly, right? And we saw the read through on alts, right, from the growth of the ETFs, and not just Bitcoin, the ETH ETFs and Solana and all of the stake ones.
Yeah.
I think you look back and go, are we, given the macro net, when you become the fifth biggest asset globally at 2.6 trillion, the rules of the game's changed. I think that's Zach's point. And I think where we would look at Bitcoin and why we've built our whole business around Bitcoin is a completely different asset to any of those others in the top 10. We meet people who hold, and I'm sure everyone on this call will meet people who hold 99.99% of their wealth in Bitcoin. When do you ever meet someone who holds 99% of their wealth in NVIDIA or Apple, apart from founders or or staff? Right? It just doesn't happen. So it's a very highly emotive asset class, and that's what makes it interesting, because it's very, it needs to be managed differently. What I love seeing, one is, speaking to the big family offices that are buying $100, $150, $200, and asking them how do they classify it. And a lot of them, and this is public, Kaust have come out publicly and said they're long Bitcoin. One of the most recognized tech investors out there, in Saudi, and they said that we just view it as a growth asset. I don't try and overcomplicate it. It's a high growth asset. I put in my portfolio as a high growth asset, and I attribute to it. And I think that's important, because when people view it like that, they're looking at it from a 5, 10, 15-year horizon, and that's our core segment, right? That's where we feel we have the most value to our end customers. So that's where we align.
So from where we are today, and taking on this, from where we're today, and first of all, I really like what you said, that basically it's an emotive asset class. I'm gonna have to take that one, actually.
Yeah, I actually said highly emotive asset class. Go ahead.
I might be taking that one. You're gonna have to trademark it first, but just to follow on that, correct? So therefore, maybe we can, Julio, maybe you can contribute on this one. If Bitcoin is then at this point in the cycle gonna behave more like a risk asset, okay? At what point, and what are the factors of liquidity that are going to affect it in over the next 6 months? And what are the things that we should be looking at that are going to potentially trigger the recovery of the asset?
Yeah, from my side, I mean, because of what CryptoQuant does, which we are on-chain data and research provider, we look at things more on the micro side of the assets. We look at on-chain data, and what we saw is, and we always try to track demand growth for Bitcoin, looking at on-chain data. And what we saw is that we had some of these that we call it demand growth waves during the cycle, since 2023, then 2024 with the ETFs. Then at the end of 2024, after the Trump election win, also we saw another demand wave. But then in late 2025, what we saw in demand is demand slowing down significantly. And this can be monitored on chain in real time. And so I think that since October, we saw all these data points for demand and for liquidity on chain slowing down significantly, and that's what took us, or switch the market regime into a bear market that we are in today. So we basically track that, not just the macro side, but the micro structure of what is happening to Bitcoin. So also that demand slowdown, it has happened in previous cycles. I know that a lot of people say we have now a different market participants or more institutional market participants. But when it comes to the data of demand, it grew really similar to other cycles in terms of the highest, the peak. We got that year over year demand growth 1 million Bitcoin, and it was really close to the previous cycles. And then the demand starts to slow down naturally, because there's only such much demand each cycle that can come in, so much capital flow that can come in. So yeah, from that point, just to answer the question about the disconnect, Bitcoin disconnect is just like the demand on capital flows peaked and then start to slowing down really significantly after that, since October, right? And so yeah, that's and you can see this in, we track it on chain, but you can see it also in ETF. Like they became net sellers after being net buyers for most of the cycle. You can see this also in Bitcoin Treasury companies. In the summer of 2025, we saw a lot of buying from these companies, and then basically they stopped buying, and some of those companies even sold some of their Bitcoin holdings, so they become also net sellers. So yeah, that's in the microstructure. I guess it's just like demand growth just slow down naturally after a really good cycle of growth.
Maybe for the rest of the group, but what are the triggers that we're looking at for kickstarting the demand on the asset? Zach.
Yeah, one of the things is liquidity, like coming back into the market. For liquidity, I like to track stablecoin growth, like the overall supply of stablecoins, specifically USDT, because it's the biggest one used for trading, or is the biggest one that sits on exchanges. So yeah, I mean that also contracted since the end of last year. It was growing. The 60-day growth was picked up around 50 billion for the USDT supply, and now it's contracting at around almost like 2 billion, I think. And so I would like to see that liquidity coming back in the form of stable coins. That will be one of the first, I guess, but first triggers that I would say it's changing structurally. So yeah, I guess stablecoin growth, and then obviously on the micro side of Bitcoin, that demand growth also coming back to Bitcoin.
Zach, question maybe on the same topic for me, for you, given not just your Grayscale role, but your experience as well as a macroeconomist. One thing we don't see much in the press, which I find phenomenal, is especially when you look at the all-time highs, the uniqueness of Bitcoin. We talked to Juan about as an emotive asset class. I think that's a given, and anyone who knows Bitcoin can see that quite vividly. But the composition of the owners, and so Julio, you touched on it. The illiquidity, even at 2.6 trillion, you kind of have to strip out the perps, right? Because it's match book, and in terms of spot volume for a 2.6 trillion dollar asset, there wasn't huge amounts of liquidity trading, right? Like your average trading volume is anything between 60 and 80 billion normalized going into October. It's obviously been impacted quite heavily negatively post then, and then more recently on exception. So you strip out 60 to 70% of that's on perps. That's actually quite limited liquidity for the size of the asset class. And I think that's reflected in, the fact that people who have been in Bitcoin know that, 24 and 25 ETF money come in wasn't just one thing. It changed the composition of Bitcoin holdings, right? So it's the first time that institutions crossed that 10% mark. Udo, you referenced, institutional holders still being relatively small. Yes, there's been growth, but like most other asset classes in that top 10 category are 90% institutional, 10% retail, right? Like we're in a scenario where I think at peak it probably got to 15% if you think of strategy and some of the DATs, and alongside the ETFs at like 190 billion, you're sort of getting to 12-13% of Bitcoin being institutional, and then you have some of the big corporates that have had the positions that are disclosed, but that's still a relatively small percentage. And again, that has to be factored in if you're looking to try and track price action on Bitcoin. I think the rabbit hole most people fall in, certainly from a financial press perspective, is they view it as just another big asset. But I think you have to look at that uniqueness of Bitcoin and sort of break it down into that purple market is very different to a futures market on Apple, right? Where these are cash settled futures and exchange traded futures that are very closely linked to the spot price. Whereas the perps market is unique in crypto more generally, and obviously specifically for Bitcoin. But Zach, keen for your view there, how you view Bitcoin given your macro hat alongside your Grayscale role.
Well, that's a big question. I think some great points, and I've learned a lot already from this discussion. So really appreciate everyone's perspective and insight. I guess what I would say, maybe two things. One is every asset class has these complexity around its market structure, and to understand what's happening with price, we need to look at all of those things. And I don't think that the rich perps market or the development of ETF options market and all these types of things, I don't think that these are in any way a problem for Bitcoin. And to me, these are signs of maturity. You know, the most mature asset class, say U.S. government bonds, has an extremely large derivatives market, sophisticated derivatives market around it. And as Bitcoin is growing up, we're seeing a richer and richer, more developed derivatives market around it. You do need to look at these things, you know, when we're trying to understand what's happening to price, the on-chain data that CryptoQuant specializes in, and kind of self-custody, high net worth holders that Xapo Bank specializes. These are all very important parts of the ecosystem, and the derivatives part and the ETFs part are part of the larger ecosystem. One thing that I would say, I might quibble a little bit that the ETFs are kind of more speculative money, but we you know, it's some nuance. What I would say is the institutional adoption of these assets is still amazingly early. You know, in some ways, like, we have achieved huge things with granting access, but we are still pretty early. You know, and I would say still very early, frankly. And, you know, Grayscale's business is about doing that every day, about kind of onboarding our products onto lots of different platforms and educating buyers about what Bitcoin is all about. And we're still in the fairly basic part of that education process. You know, I still, on a regular basis every week, have to talk about peer-to-peer finance. Oh, I can send you assets on a peer-to-peer basis on a blockchain, whether it's a stablecoin or a Bitcoin or a tokenized stock, without an intermediary. You know, we're still doing that kind of the education for institutional investors. And I think for the ETF specifically, one kind of tell that's very transparent on the lack of institutional adoption so far is endowments, like university endowments and these types of things, are still a really tiny category on these ETFs. You know, you have some of the kind of forward-thinking institutions, Harvard, Brown, Emory University. They show up in the 13F filings for the ETFs, we can see. But I think that list should be much, much bigger. I mean, an endowment that is trying to grow wealth for the longer run, but also has to think about the liquidity of its alternative assets. You know, building in a liquid alternative like a Bitcoin into a diversified portfolio, to me, is kind of a no-brainer for those types of portfolios. And you're still quite early in that process. So just sharing some high-level thoughts on those comments. Agree with a lot of the comments. I would say, you know, we're still early. There's lots of different dimensions to the market structure, and it's all kind of growing up together and changing how the price behaves in markets. We try to kind of follow that evolution and track all of these indicators over time.
When it comes down to, you know, to market structure, I wanted to get your view on a couple of additional things. So, you know, historically, when we look at the cycles of Bitcoin, we've always had a narrative where every up cycle would come with a trickling effect into the rest of the digital asset ecosystem. Right? Now we've been discussing that you know, there are a lot of structural things that have changed now that there is a bigger proportion of the capital Bitcoin that is maybe held by the ETF and institutions, even though it's a small percentage. In any case, we have not seen now that effect, you know, going down into the rest of the altcoin ecosystem. Is this the end of the correlation between Bitcoin and the altcoins, or can we see, or do we expect still a correlation between those ecosystems, or are they separate classes now?
Can I raise my hand and just offer a couple first thoughts on this? I think it's a very good question. I just want to make a couple of points, and then I'm very curious other people. So at some level, I want to strongly agree with your point. You know, when we launched the Bitcoin ETFs, I thought the obvious, you know, first trade is the Bitcoin, and then there's some obvious next trade. As soon as somebody gets educated about Bitcoin, the next thing that they will learn about is, oh, maybe there's some other stuff on chain, like ordinals, or maybe there's smart contracts that Ethereum does in Ethereum. You know, so there seem to be like obvious next trades, and that did not happen. You know, I was totally wrong about like how that would play out in early 2024 when we launched the ETFs. So at some level, I want to strongly agree with you. And then at another level, I do believe that there will be a correlation between these things at some level. Now, the market is getting more sophisticated, and I'm curious other people's view on this. But the point that I want to make is that I do think that in some ways, the next phase of the market actually may not be Bitcoin led. My own personal thesis is that the next trade, the next kind of mega trade in crypto is probably about stablecoins and tokenized assets and capital markets related topics. And maybe the smart contract platforms have a bit more beta to that theme. However, even in that type of market environment, I think it's very likely that Bitcoin wins. And Bitcoin is still the kind of cornerstone asset for the whole ecosystem, even if there's other themes that are kind of driving things forward. You know, as we kind of start to see the next stage of the rocket here, the tokenized capital market sort of stage of this thesis plays out. I still think Bitcoin is the cornerstone asset and participates with that. So at some level, I agree, and things are changing. Another level, I do think we should expect the kind of marquee assets, Bitcoin, ETH, Solana, you know, the kind of core assets to move together to some degree, because they are still part of the same ecosystem, even if they're doing different things. Okay, I just want to share those quick thoughts.
No, absolutely. I do find interesting more than even like, you know, the other, you know, Ethereum and Solana and so on. They're still at the base layer of the ecosystem, right? But you're mentioning as well this potential demand for, you know, basically the revenue generating aspect of the market, you know, which I think are basically the DeFi protocols. Today, we see how things like Morpho, for example, bringing the money markets ecosystem has actually performed very well. Thomas, do you see from, you know, the high net worth individual perspective and the institutional clients that you guys have, demand for these adjacent crypto assets that do have actually revenue and could start to be, you know, categorized as growth assets as well as the amount of AUM in these smart contract platforms continue to grow?
Great question, and I kind of align with Zach in terms of B2C's place has kind of gone past the point of no return now from being credentialized as the leading crypto and digital asset, right? I think that's kind of well documented already. I can share. Look, what, you know, if you look at Xapo and what we've built around, you know, we're focused on. I think one thing with the price action, just to note before we do move on, is, you know, it's a very tough period. There's actually very few consensus catalysts that we could all agree on. Okay, outside of the US regulation, that you could point to, go, we're waiting for this decision, and that could be positive for Bitcoin or crypto, right? And I think that's the kind of uncertainty. So there's this level of uncertainty, which is closely tied to a speculative investor. If I'm a speculative investor and I didn't understand crypto and I saw October, and, you know, there's all this uncertainty then, and to Zach's point, it's wider than Bitcoin. It's in you know, the software and what have you. Then you can understand the bearish sentiment. Where we've seen growth, you know, we have a credit fund which is managed by Hillbrook Capital, so it's outside Xapo. We've done specifically, we wanted to be regulated, we want to be external. We had an external investment manager who we're very happy with. You know, despite October through to December, and actually even January and February, we've closed off at net positive inflows in every month. And that what that shows you, this is a B2C share class, and so that long-term holder, some of those are family offices, fairly new to Bitcoin, right? So, but what they're committed to, it's a growth strategy. And rather than trying to second guess it, like comment earlier, look, let's just try and get some yield on it. We're in this for 5, 10, 15 years. So there's been, not just with us, there's a new conveyor belt of very sophisticated Bitcoin share classes coming to market. I think that's a trend that we can continue to see this year. So rather than trying to exit and crystallize losses, you know, give alternatives to people who are holding Bitcoin from an investment lens for medium to long term. And Grayscale, I think, you know, and that asset management play a very important part of that. That's very often, you know, Grayscale is an institutional's first step into crypto. And so, Zach, just to be really clear on that perspective, I'm talking about a very small portion of the ETF. You're the retail sector, a buyer of the ETFs, viewing as majority's perspective. You know, clearly you have a lot of institutions that are long-term investors that will go through an ETF, and that's great for crypto and great for digital assets. And, you know, I think you specifically, you know, given the history of Grayscale, have done a lot for that. Going back to your original question, Juan, on alternatives, we get less interest in, you know, what alts do you like, given our ecosystem and our network, right? We've been around a long time. And we get interest from, you know, I'm talking the $30, $40 billion family offices. Okay, look, what infrastructure do you like? And so, you know, we saw Apollo and Morpho, and we've seen some. So I think that's really telling. Like, I think that's so if I'm an altcoin linked to, it's an institutional infrastructure play, right? So Zach and Julio both touched on, still relatively very early from institution. Yes, we've come a long way. You know, the ETFs could not have been approved, right? You know, and Ironically, actually, my former shop, Paul Atkins, the SEC chair, was a consultant, and we had a call with Paul the day before Gary against their announcing the SEC decision on ETFs. And so, to go full circle for him, that he's very crypto forward. I think he's a great guy to have in that position. He knows crypto, he understands crypto. He's worked for a crypto firm, as a consultant. So that's positive. But on the infrastructure side, we're definitely seeing, some really well-established companies like Canton. They've been around a long time. Yes, you're seeing a lot of them now. They've been going for 9-10 years of hard graft and getting into the weeds, and you're trying to make a network and infrastructure for institutional adoption. I think that's where we see interest. And I think, to Zach's point on, we'll typically see it with Bitcoin, whether it's stacking Bitcoin or looping Bitcoin or bridging Bitcoin or, DeFi into CeFi Bitcoin. They'll tend to come through to Xapo and try and pitch. But it's, it's not just Bitcoin, but like that's from the infrastructure side, we see a lot of that. I think some of those are going to be very well built businesses, and the future of investment is going that way, right? And, I think Coinbase, you just look in this bear market, the stock yesterday being up, 14-15% on the everything exchange announcement shows you the direction of travel there, right? And I think, that's that's been a helpful catalyst, not just for their stock, but just the broader digital asset industry. It's not just about Bitcoin and ETH, it's about investments and, the whole asset classes moving to tokenized and digital. And that will present amazing opportunities for those that succeed. And we see this year as a great opportunity. There's going to be some M&A. People are going to get some really good bargains this year with sell-offs, right? And so that's if you're a long-term investor, we've spoken to several people who are very interested in buying VCs at this stage. But Julio, keen for your view there as well, given your knowledge of like the wallets and activity, specifically, you'd probably be better placed alts versus Bitcoin than me.
I think that for this in this cycle, the difference was that in previous cycles, basically everything went up. When we were rallying, every altcoin that you could buy, it will go up. Every token also in tandem, everything. And now we saw this cycle that the market, I guess the market learns, the users learn. It was more like a more focus on specific sectors of the industry. We have some good runs for tokens in perpetual, centralized perpetual futures market, right? So that they were actually growing, like the protocol or the application was actually used. That's I think that's a clear difference, and that people now need to do better, curation of which token is gonna perform well. It's not gonna be everything goes up again. I don't think that will happen again. It's just specific sectors that we had also some in this cycle, some AI in a period which also outperformed. So that, first of all, like the curation of which sector is going to grow and show actual user engagement and actually solving a problem, right? And I think that, and the other thing is that most of these tokens, I think that they're not directly linked to the protocol performance. So, for example, you see Uniswap, for mentioning one really good project that has grown a lot. It's the largest decentralized exchange, spot decentralized exchange, but the token doesn't perform well. And I think that it's because if you're a holder, you don't get the part of the revenue just for holding it. You have to do something. You have to maybe, I don't know, and just
Has it actually been growing? Can you tell us a little bit about the data that you've seen on that? I think a lot of people.
I mean, I don't have the data right here in on my head, but it's something that I've seen with some tokens that the protocol actually performs well and generates revenue, but the token doesn't perform well. So I think that there's a disconnection there, and maybe this protocol should be making a more direct connection between the revenue that the protocol generates and the token, right? And so that will be my 2 points, is that it's not gonna be like everything goes up again anymore, and also like this direct link between protocol performance and token performance.
So it seems to me, like what we're saying here is, first of all, rationality is kicking into the market. Fair enough. Yeah. And I do find very interesting from, Thomas's comment, because we see the same at Kirok, the enormous demand for Bitcoin yield at the moment. It's incredible, the enormous demand for Bitcoin yield. I'd like to give you guys maybe an alternative idea on altcoin performance, see what you guys think. And so, early on, when we think about utility tokens and their value, there was this whole theory that as they cannot be valued as a cash flow asset, uh, the closest thing that would represent a value would be network economics. So you would say, okay, the value of a network is the square root of the nodes and the participants. And so, I was looking back that again, and kind of like looking now within the context of rationality, and kind of like to make a bullish case on altcoins in within all the panic that is going around. uh, Very, very aggressive loss of value makes sense in within the fact that, in the same way that there is exponentiality of value created when networks expand, there is exponentiality of loss when networks contract. And so something like Uniswap might be doing great, but in the great scheme of things, it actually, within the whole demand contraction, has a lot less active users. And that negative impact basically decreases value of its network exponentially. But in the same way, it could mean that on a growth network, which, for example, we saw recently with money market protocols on the adoption, would have a, once again, exponential value creation if they continue to get value as network economic models. What do you guys think of that? Anybody wants to take it?
I'm happy to make a couple quick comments. I mean, I completely agree with the economic point. The economics of network technologies, which is mostly what we have in crypto. Not every single thing, but mostly these things are network technologies. And the basic point that you're making is that there's a non-linear relationship between value and use or adoption. And as adoption is going up on the x-axis, value goes up exponentially on the y-axis. But the reverse is also true. You can have these death spiral outcomes where, if the network is shrinking, that you have exponential loss. So I agree with that point. I do want to say one thing maybe that's helpful for the audience. So when we look about altcoins, I do think that there are, broadly speaking, two types of things. There are things that are like a commodity. Litecoin is a altcoin, and it is a commodity, and I think should not be valued on the basis of cash flows. But there are lots of other things that look more like businesses, let's be frank, and probably should be valued on the basis of cash flows. And the reason that the market has not graduated into that mindset is regulatory in nature. And the Clarity Act and some of the other regulatory changes are exactly designed to clarify this for everyone, so that if something is security-like, that it follows security-like rules in terms of registration and disclosures and behavior of insiders. And that is going to help the market grow up even more. And I think that this is in no way bad for altcoins. I think this is extremely healthy for that part of the ecosystem, that we clarify the rights of token holders and the responsibilities of insiders. This will allow institutional capital to come to that market. And in my view, I think the underappreciated thing about this is it's going to allow issuance to explode. That once you have a market that has all of these regulatory parameters around it, mainstream institutions will be able to issue tokens and register them as security tokens, and just like anything else. So I'm quite optimistic about, say, the altcoin space, and it's going through a kind of growing up process, and there will be things that are left in the crypto past. But I think it's a very bright crypto future also for application layer, cash flow-like tokens. I think the regulatory underpinnings of that are coming together now. And I think maybe that's still a little bit underappreciated, even by kind of crypto natives.
We forgot to say this before, but just for the sake of Thomas, this is not financial advice.
Yes. Yeah, no, thanks for flagging that. Actually, my legal and compliance team did remind me. So we are a regulated bank. Yeah, we're not providing, well, at least I'm not providing any financial advice. I think to Zach's point, look, I have a much less informed view of altcoins. I think I kind of look at digital assets very much from a TradFi background of there's Bitcoin, there's probably 4 or 5 tokens. I mean, Solana, Lily Lou, phenomenal. There's a XRP team, the Ripple team are fantastic. Nigel and Rahul in London. So, there's a use case. I can see an investor case for Solana because they're everything from ETFs all the way through, right, and meme coins and the full spectrum. I can see a longer term growth strategy for XRP in terms of Ripple because of the the cross-border payments and just the infrastructure and sort of the investments they've made and some of the businesses they've bought. I think have been very astute over the last couple of years. But then beyond that, I'm just less well informed. I think what I can say is, as money, I think the key top 3 or 4 tokens can be attracting capital into digital assets, and therefore some of these altcoins, specifically if it's about infrastructure around the use of of these assets from institutions or scalable infrastructure in the digital asset, will then also benefit, right? Because the capital's coming in, they'll understand these assets, they'll understand the business case around it. I mean, not to say there aren't multiple other good investment opportunities, I'm just not well informed. But yeah, I think it'll be less the past, Hugo's point of the past scenario of the altcoin run and a lot of money coming in. I think I can't envisage that coming back anytime soon. So I think it'll be much more which I think is probably investment discipline, trying to look through. There's still going to be high growth stocks, right? So they're not going to be cash flow generative businesses. But that unit economics and that linear equation is very astute in terms of how you would value them, right? And so I struggle actually when I start looking at some of the altcoins in terms of the investment case. But where there's a clear usage, there's a clear infrastructure play, I think they would be certainly of interest, and we've seen that.
I guess the problem is that even when you have that clear usage, because of their high volatility, sometimes there's a lot of disillusion, right? Because you see that usage, and then the price seems to not actually completely correlate with usage. Which also
I think actually, it's a good point, Juan, because I think we see that on a lot of like wrap tokens. There's some good products out there. There's some very well run products and protocols. But some of the risk, the systematic risk of these loopings and bridging, you start looking in under the hood, and it scares the life out of me. You start thinking of, so unfortunately they are quite destructive to the broader altcoin industry as well, right? But yeah, that's kind of another subject.
Yeah, just one question, just for Zach or Thomas, regarding this, why institutional investors won't invest in some token protocol, right? Have you seen what's the main reasons in terms of risk? I'm thinking about the risk of being rug pulled, right? For example, is there something that your clients, your investors tell you oh, this is really a concern for this type of protocols or tokens?
Well, let me say, I think what Thomas would say is that this is why Bitcoin is that self-custody.
Hey, that's fair.
Is the right answer for for large-scale capital, at least as they're beginning a crypto journey. But I'm more active in the Grayscale. We're active in the full spectrum of things, and maybe just to share, this is a data-driven podcast, so let me just share. I mean, there's say 50 million crypto tokens if you literally are trying to count everything, including all the Solana meme coins. There are maybe 300 or so that are the kind of quasi-investable space. So we have an index framework for tracking, what is the listed and liquid token space, and there's maybe about 300 or so, and then there's new TGEs all the time, maybe a couple relevant TGEs per quarter. So that's sort of my team's coverage area. We look at that whole space. Not all of that space is ready for institutional capital, and I think the ETF process has helped kind of clarify the things that are institutional grade and natural place to begin. And there are many things that are not going to be ETFs because they're not really at that same grade. And we do talk about all of these topics. And I certainly risk in crypto investing is really the first thing that you talk about. When you start talking about the assets, there's the people are interested in investing in this space because it's new technology that is transforming the financial system, and the financial system in the future will look practically unrecognizable to what it does today, in my view. And that's what, what people are interested in, is that we have this new transformative technology of public blockchains. The technology what brings people in, but then when we talk about investing, you do have to start with risk. This is out the risk spectrum. Even Bitcoin is out the risk spectrum compared to like an index equity, for example. And then certainly when you go down the altcoin list, you have higher volatility and then more tail risks, like smart contract risks and other things. And so, institutional capital is very interested, but also very risk focused and thinking about their broader portfolio. And so they begin with Bitcoin, with ETFs, and then take further steps beyond that. But the risk point is extremely important, and certainly not that whole 300 set of assets is institutional caliber at this stage.
Yeah, absolutely. I mean, if it serves as any reference, I mean, I think the maturity of option markets also helps you define a little bit of the the space in which institutional capital can allocate. And the reality is that today, outside of Bitcoin, Ethereum, and Solana, nothing else has near the capacity to absorb risk management in an appropriate way in the space, at least. So even I would say from 300 you go down to maybe 3.
I concur with that. I think it's obviously hard to bucket an institutional investment into one bucket. You could say within that, VCs, right? So we were VC backed, right, in 2013. We paid back our VCs. They've done phenomenally well and turned a $40 million investment into multiple billions. And so, there's always going to be VCs looking at forward-looking companies. I think that pocket will still be active, to Zach's point on technology but the endowments, can you see a Harvard or a Emory University and invest in altcoin? No, because they're just not allowed to, right? The consultants haven't adopted them, whether it's Cambridge or Holborn. The due diligence if you put on a spectrum, the institutional investors, it's quite a wide spectrum, right? And so for us, we see most interest from like family offices, VCs, dedicated crypto VCs, and there's obviously some very successful ones. Zach, just to correct you, we're not self-custody, we are a regulated custodian. Gibraltar will deny me access if I don't point that out, and it's a key part of our business. I think in terms of data, though, I think one thing that we did notice is like $100,000 when Bitcoin hit $100,000. We've been around a long time. There is definitely a component of Bitcoiners who have been my coin, my keys, and self-coin, and never trusted even a Xapo, right? Even though and all we do is Bitcoin custody in terms of a custodian and a regulated one. And when we got to 100,000, we managed acquisition and client acquisition. That was a very key number, just headline price, where people said, now I'm taking too much risk of self-custody, so that was one observation. And then two, conversely, we did see some of our longer term holders sell it at 100,000. I mean, we've done client events, and it's very interesting meeting these people, because sometimes I find like my TradFi friends, Doyle, aren't you disappointed you didn't buy Bitcoin in 2013? Well, no, there's a 0% chance I'd still own Bitcoin if I bought it in 2013. My mindset is not to hold an asset that I would just never have believed in it as much. Now I'm obviously more fluent and educated on Bitcoin. But back then, you transported me out of a bank into buying Bitcoin, I'd have sold it up 20%, let alone 100%. So, understanding that emotional attachment to Bitcoin is a big part of our philosophy and vision as well. And I think 100,000. So, getting back to 100,000 is a key number from a variety of different lenses, actually, as you talk to sort of medium, long term.
Absolutely. Just to, starting to wrap up, I wanted to maybe take you guys out for one last topic, going back to the macro, that's where we started. As part of our research, we wanted to also get your opinion a little bit on some of the analysis that we have done in terms of what's coming next for the macro triggers that could actually push the liquidity to come back into the market. And so one of the things that we've actually came out of all of our analysis that was very interesting, and I'm actually, if you don't mind, I'm going to share my screen with you, because I want you guys to see the chart for this. Can you see the chart?
Yeah.
Yes. Yeah.
So during all of analysis of expansion of market liquidity, and especially when it comes down to issuance of T-bills, as we believe is one of the predominant factors that would trigger in the coming year a interest for risk assets, especially Bitcoin, as the correlation shows, is that we are in a very special moment where during the COVID times, there was a lot of debt rolls as the interest rates were very low. So the Treasury decided to basically refinance their debt, as it was logical to do so. And majority of that refinance 5-year horizon is coming to an end now, which means that there is a high expectation that the negative trend on issuance of T-bills might reverse, as there is going to be a high need for rolling and reissuing in the year to come. Typically, in our analysis, that is correlated with a increase of liquidity in the market, and again, a growth of risk assets. Typically, with our within a lag period, of course, as capital ripples into the economy, generally 8 months. And so within this, what we are expecting is that if that trend does shift over the year with the need of rolling the T-bills from the Treasury, this might actually create again towards the end of the year a surge in market liquidity for Bitcoin. And any opinions on that? Zach?
I never hesitate to share my views, but yeah, always also happy to hear from others. Look,
Well,
I think it's a solid analysis. I think measuring the liquidity impulse in the economy is a challenging question, and I think this is a valiant effort to do that well. I spend a lot of time looking at currency markets, and so I personally tend to put a lot of emphasis on real interest rates as a kind of metric for whether liquidity or the monetary impulse is getting easy or tighter. And so, if we're in an environment of falling real interest rates, I would generally think that that's a supportive environment for non-interest-bearing currencies like Bitcoin or physical gold. So that's an indicator I tend to put high on the list, but I think this is a very good analysis. Just in terms of triggers, look, or the kind of macro, I would just say my TLDR view is that things look good. I mean, the U.S. economy looks fine and is probably accelerating. And I think that the AI kind of mega thesis, and really that is the huge thing driving capital markets and investment in the economy. I think it is holding up. There is this question about overinvestment, but we still have compute shortages, and there's the innovation breakthroughs are going faster and faster. So I don't see that. I don't think we're at the moment where we think that this is slowing down. And I don't think Kevin Warsh will be that hawkish as a Fed chair, to be honest. So I put those things together, solid economy, AI investment thesis moving ahead. The Fed is probably not going to be a problem for our asset class. I think the macro is fine for crypto. Now, there's always other things going on, long-term sellers and Clarity Act and the quantum question and all these things. And these are all important for thinking about the price outlook. But as far as the macro goes, I'm pretty encouraged. And I would say bottom line for me is these are good times to be accumulating these assets. That is my personal view. And I'm quite constructive on the outlook from here.
Yeah, I think aligned with Zach, certainly on the dovish Fed being helpful for Bitcoin and broader crypto. One thing we see a lot of at Xapo is obviously emerging market activity, right? And when the high inflation or distrust in a local government or, political instability, that's a drive to Bitcoin. So on a global macro, to Zach's point specifically about the US, which is so crucial to not just crypto, but global capital, right? Given the position it's in. For us, EM, on a global macro scale, are we, more, higher risk of sort of global, certainly with the tariffs and the back and forth, the risk metrics probably gone up there, right? And so there's certainly scope for more uncertainty in some of the emerging markets and more political uncertainty, which is generally beneficial for Bitcoin because that pushes people towards Bitcoin adoption in those markets. I think one point, if you look at Bitcoin, from the people that hold like, $500 billion worth of Bitcoin, when you're speaking to them about their longer term strategy, it's often interesting to say, okay, what are the threats? What are they actually worried about? As opposed to like, what are the catalysts? Like, what are they really, what are the real threats they're looking out for? I think from here, specifically with the US, Trump being so pro crypto, if the Democrats were to come in, and again, I'm not a political advisor, would that be could crypto and specifically Bitcoin be an easier target to retaliate on Trump, potentially, right? So that's a threat people have to assess, and from that lens, we're not in any meetings here, right? We've got the midterms coming up later in the year, but that's something out there, sort of a couple of years out. I think on the opportunity side, strategic reserve. We saw Brazil bringing in the strategic reserve. We did a team in El Salvador at the Tether conference, the Plan B conference. You can buy coffees with Bitcoin down there, right? And so adoption, something we're very focused on at Xapo. Bitcoin adoption. People use our card in 100 countries on a monthly basis. That's still a relatively small percentage, though. And so I think one point, again, data driven at 2.6 trillion valuation when Bitcoin's trading at $126,000. There was still relatively few people holding Bitcoin. Like close anywhere between 100 and 150 million people globally, according to CoinLedger or Chain Analysis. That's still only 1 to 1.5% of the world's population. So it's a very low number actually own Bitcoin. And then it's very hard to see the usage right outside of platforms such as ourselves, which are now morphed into the more high net worth and ultra net worth. At one point, we had millions of clients, but they weren't profitable, right? And so we had to introduce a fee schedule because we were just transacting and supporting flows, but not generate any revenue. So opportunity-wise, emerging markets, strategic reserves, Brazil, I think we could see a trend of that. I think China coming out, Juan, looking at T-bills specifically, China coming out of T-bills was a big thing. Were they to rotate? China's obviously got a lot of Bitcoin wealth, right? And we're all aware of that. Whether that's filtered through to Singapore or Hong Kong, a lot of them, not just exchanges, but the big crypto players and the miners are China-based, China at least initiated. And so that's interesting, like as an opportunity. Could it be a threat as well, right? That's something we'll keep an eye on. But there are a couple of things that they're the big strategic holders of Bitcoin that come up in conversation with us.
Yeah, I would just wanted to mention. I mean, I think that the path of interest rates is important as a catalyst, right? But also, I would and how the liquidity evolves after that. After if the next Fed chairman and they decrease interest rates, but how that transmits into liquidity in crypto markets, if it does transmit. And as I said before, I like to look at the expansion of stablecoin supply. So because much of the last year, especially since the summer, people were sharing a lot of this analysis of M2 money supply like going up a lot, right? And historically, Bitcoin follow also that, but not this time. So the price didn't follow that. And at the same time, the liquidity of stablecoins also dropped. So I would just like to look at if there's the transmission mechanism into from the macro liquidity to liquidity in for Bitcoin and crypto assets.
Guys, I'm liking these conclusion thoughts there. I like looking at threats more than triggers, and I like looking at stablecoins as a transition from the global economy into our industry. That sounds great. So I'd like to do one last round for closing. It would be great if each of you can give us, a small conclusion on what's exciting at the company that you guys are working at over the next 6 months, and what is one trend that you think is interesting for you to keep an eye on over the year. Maybe we can start with Zach.
I'm very excited about the entry point. I'm just going to go ahead and say it. I mean, I think you either believe in what's happening in this industry and this, what I view as a absolutely mega trend in financial services and our economy. You either believe in that or you don't at these prices. And I think I'm excited about the entry points, to be perfectly frank. On the Grayscale side of things, we're always working on new things, and I think that you will continue to see us innovate on products, and maybe just to share the marginal thing is staking is a huge issue. We're the only U.S. asset manager staking in the ETFs at scale currently, and more staking related products, maybe something exciting that we're working on here.
Thank you very much, Zach. Thank you for sharing all your thoughts over the session today. Well, Thomas.
Maybe closing marks for me. Look, it's going to. I see it still, even if it's a dovish Fed. I think it's going to be challenging 2026, at least for the first half. I think what we're focused on at Xapo is continue to add talent. It's going to be a challenging year for our peers, like people have been let go and corporates are downsizing, and we see that as a great opportunity to get talent. And we've done that. Then we'll continue to do that. But from an external lens, for our clients, Bitcoin share classes. I think we've got a very successful credit fund. We're delighted with how that's going. Having net inflows since October is really battle tested for us and kind of proof of our approach. And we're looking to launch a second fund in June, July, and then potentially a third fund in September. So Bitcoin wealth, being able to, because coming back to those sort of longer term holders, medium to long term holders, try not to second guess the entry points. I think there will be entry points, Zach, and hopefully our data supports that with the net buys for February, touch wood, being the first month for us for close to a year, since February last year, actually. We have more Bitcoin share classes, and we take a regulated route, and we'll have external managers, so that's exciting for us and our clients.
Thank you very much.
For me, same as Zach. I mean, because of what I do on CryptoQuant and what our clients do with our data, it's to take investment decisions. So we're monitoring a lot of how the price progresses, and how the data, waiting for the data to confirm like a bottom. It takes time. It takes a lot of time to confirm a bottom and then start again moving upwards after the bear market that we are in. So monitoring the data to get that confirmation. Probably, I would say Q3 or Q4 this year. But always monitor the data, and that's what we do and what our clients do with our data. And from the CryptoQuant side, it's just getting more data out there for people to be learning about the market, learning about Bitcoin, how to analyze it. There's also still a lot of education to be done. Giving more data and more tools for our clients. And thanks for the invitation. Fun.
Well, thank you very much, guys, for spending the time with me today. I think I also learned a lot from you guys today, and hopefully, we can continue to collaborate and build meaningful relationships with KeyRock over the years to come. And so, I wish you guys the best for the rest of the day and the year to come in the market.
Thank you very much. Thank you, guys.
Thank you.
Bye-bye.
Bye.